We've had a lot of comments today alone on the ECB, and while you talk about easing, let's move to the ECB now. We had Christine Lagarde revealing a pretty dovish position. She told the European Parliament that she basically follow Mario Draghi's strategy and that there wasn't an end to the zero bound just yet, or to the lower bound, that there is still room to manoeuvre. And then we have the ECB's Klaas Knot saying that the economy doesn't yet warrant the resumption of QE. How does the ECB proceed?
We have definitely a package. I think the last comments by Mr. Knot are definitely hawkish comments. I wouldn't take them too seriously. But we are going to get a package which probably will include a rate cut, tiering to smooth some of the negative impact of negative rates on banks, so making banks not pay as much negative rates on deposits, and a resumption of QE. The Eurozone does need a return to QE. However, negative rates for a prolonged period of time tend to have a lot of collateral effects, particularly on an economy that depends on banks. The Eurozone, in the Eurozone, 80% of credit is from banks, and if you keep interest rates very low, banks have a problem lending to small businesses, and that hinders the job creation process. So on the one hand, the ECB wants to keep the euro low, but we think they should really focus on quantitative easing and helping interest rates converge to a lower level for periphery countries, which are the ones that need it the most. We'll probably see a mix of measures, and it's probably not the end of the QE process for the ECB.
The thing about interest rates is that, we're at zero in Spain, Portugal, we're at minus 70 basis points in Germany. BTPs are even below 1% now, Alberto. Where does it end?
There is a boundary around minus 1% where it's better for you to store cash or gold underground. You can put €1 billion in a cubic meter of space, and essentially you'll get zero rather than paying minus 70 basis points. So there is a physical limit, and we think we're getting close. That's also the reason why the ECB should focus more on the real economy, for example, buying more corporate bonds or even bank bonds. If you keep interest rates at negative for too long, you can almost have deflationary effects. In an environment where populations are aging, people need to save for their pensions. If they see the returns are lower, they're actually going to save more if interest rates are negative. So we don't believe so much in the rate cut story as a push for economic growth. We think QE, and especially the combination of QE and fiscal stimulus, is key. But for that, we need some leadership on the fiscal side by the EU and Germany, and we haven't seen that yet.